In the 6 weeks since the Bank of England last met to set interest rates, there have been 2 Prime Ministers, 2 Chancellors and a crisis of confidence in the UK economy. The bank's response, the biggest single interest rate increase since way back in 1989, a 0.75 percentage point increase, taking rates to 3%, their highest since the 2008 financial crisis, and it says rates will rise further, though perhaps not as high as the current peak the market expects of close to 5%. It's acted because inflation is running at more than 10%. It could peak at 11%. Again, the highest since way back in the 1980s and a product of high energy prices exacerbated by the war in Ukraine. The bank's worry is that this imported inflation could become embedded in the UK economy as wages rise to keep up. So by increasing rates, the bank is trying to squeeze demand and bring inflation down. Now, what does it mean for mortgage holders? Well, today's increase alone will have added £700 a year to repayments on a £100,000 tracker mortgage, and fixed rates have soared. Look at this, the current average rates for 2- and 5-year fixed mortgages. They're both at more than 6%. A huge increase in cost imposed in just the last few weeks. And the bank's clear responsibility for a chunk of that extra cost lies with Liz Truss and Kwasi Kwarteng. This chart shows the yield on 10-year UK gilts. They're a proxy, a measure for government borrowing. The blue area shows the impact of what the bank says are international factors shared across the world. The red is what it calls the UK premium. That's an additional cost of more than 2% since August, imposed on homeowners, businesses and government, made worse by the mini-budget in September. As for what happens next, that's the bleakest bit of the bank's outlook. It's forecasting a recession lasting up to 2 years. This shows its projections for GDP, the size of the economy, and it's getting smaller. The pink line, the higher line here, is the path of a recession if rates remained at 3%. We know they'll go higher. The darker line is if they increase in line with market expectations. The reality is it'll be somewhere in here, in between, but it still means a recession lasting deep into 2024 and only slow recovery after that, with unemployment peaking at around 6.5%. And at no point does the bank's forecast say the economy will return to pre-COVID size. The UK, it seems, will pay a high price for the pandemic, for war in Europe and political turbulence at home.